Welcome to the Thursday edition of Tech Stocks Daily, your quick dive into the tech market's latest action. Today, we're having a front row seat to the drama at IREN Energy, caught in a whirlwind of class action lawsuits over alleged Texas operations misrepresentations. Then, Vimeo is riding high on revamped earnings estimates and a stellar 52-week high performance. Over at AppLovin's, we're witnessing an explosive 48% stock surge fueled by a third-quarter triumph and some savvy AI-driven growth moves. Lastly, EPAM Systems rebounds with impressive earnings, shaking off geopolitical tensions and diving into future tech expansions. Stay tuned, folks. You won't want to miss these gripping tales from the NASDAQ. All right, folks, put on your thinking caps because today we're diving into a drama straight from the world of high-stakes tech investments. IREN Energy, trading on the NASDAQ under the ticker IREN, found itself entwined in a bit of a legal tango, and it wasn't quite the cha-cha they were hoping for. Let me set the stage. IREN Energy is what you'd call a next-generation data center business, flirting with Bitcoin and rubbing elbows with AI. Essentially, they're the hardware powerhouse claiming to drive forward these digital revolution stars. But here's the rub. They've been slapped with multiple class action lawsuits, and investors are not thrilled. Enter the trio of legal eagles: Bronstein, Gewirtz and Grossman, Levi and Korsinski, and Robbins, Geller, Rudman and Dowd LLP, each with their own scales of justice ready to tip. These firms dropped announcements saying they've noticed investors suffered substantial losses. Why? They allege that IREN was painting a rosy portrait of their business, with high-performance computing and data centers beaming with promise, specifically at their Childress County, Texas site. But these statements might have been art with too much artistic license, because reportedly, the Texas operations had some glaring issues. Let's break down what the lawsuits claim. These allegations revolve around making misleading declarations about operational capabilities and sustainability that weren't grounded in reality but dreamed up on an Etch-a-Sketch. As soon as these supposed tall tales were made public, reality hit investors hard with potential damages knocking at their door. Now, IREN Energy's executives might have been caught with their hands in the predictive cookie jar. And boy, those Wall Street cookies crumble messily when they do. Investors burnt by the downturn, occurring notably after a July 2024 report titled "A Prius at the Grand Prix" by Culper Research, saw IREN's stock price stall and tumble over 15%. That's enough to make any shareholder feel like they just signed up for a masterclass in unintentional stunt cycling. What's next on this docket? Investors who've suffered losses during the magical realism this story period runs through, from June 2023 to July 2024, have until December 6, 2024, to heap their losses onto these class action bandwagons in hopes of recouping fallen stocks. These legal types love to chase recovery with the enthusiasm of a dog after a squirrel, all without expecting investors to shell out any upfront courtroom fees. Each law firm throws their hat in the ring, claiming no-cost representation and inviting investors to take a lead plaintiff role, which is like being the Ferris Bueller of the lawsuit, but with potentially high financial stakes involved. So as damning as this lawsuit news sounds, it's just the opening salvo in what could be a lengthy and robust legal proceeding. IREN Energy, as enthusiastic as they were about energy futures, might now find its powers bound in courtrooms for a while yet. And that, my friends, is what IREN Energy is making headlines for today. Less stellar profits, more courtroom traffic. Keep those portfolios diversified and your lawsuits south of diligent investing. Wow, Vimeo is certainly getting some attention. Let's dive right into what's making headlines for Vimeo today across multiple fronts. First up, we're seeing some strong momentum in Vimeo's financial storyline that's turning heads. Analysts have been revising their earnings estimates for Vimeo upward, and that usually ticks the optimism box for investors. The Zacks rank, which is a well-regarded stock rating system, currently gives Vimeo a rank number 1. What's that mean exactly? Historically, stocks with similar rankings have shown a tendency to outperform the S&P 500, which is definitely something to smile about if you're pondering investment options. Analysts encourage this optimism as the consensus estimate for Vimeo's upcoming earnings saw a significant boost, shooting up 128.57% in just the last 30 days. So there's definitely some bullish sentiment in the air. But the buzz isn't just about numbers from some financial crystal ball. Vimeo's recent stock performance deserves its own spotlight. Imagine a stock that's up 39.5% over the last 4 weeks. Yes, that's Vimeo saying hello to a fresh 52-week high at 7.18 cents. Impressive, right? All eyes are on Vimeo to see if this rally is just the beginning or if it's about to plateau. Their stock's performance looks particularly good alongside the industry average, making it a standout contender in the tech arena. For those who love dissecting under-the-hood numbers, Vimeo's fiscal health and momentum seem more robust compared to industry counterparts. With a solid background of not missing earnings targets for the last 4 consecutive quarters, they keep giving us reasons to stay tuned in. Their growth is evidenced by a forecasted EPS for the current fiscal year, which not only keeps pace with, but slightly outperforms prior predictions. The company has also shown resilience despite a slight dip in expected revenues, a 1.25% shift, demonstrating adaptability and strength in its core offerings. However, before you back up the truck on Vimeo shares, remember it's trading at a premium regarding its fiscal estimates, sitting at 49.3 times this year's EPS estimates compared to the sector average. Basically, Vimeo is riding the high wire of price tags, which might give value investors something to chew on before diving in. Lastly, if there's anything we can take away from Vimeo's current narrative, it's the power of relentless innovation and capturing market momentum. Vimeo seems to have cracked the code for keeping investors keen and analysts slightly giddy with rising estimates. As the tech landscape continues to evolve, Vimeo and similar tech service companies like AppLovin's Corporation prove that innovation and perseverance make for an engaging stock market story. So there you have it. Vimeo is shaking up its space with robust financial forecasts, stellar recent performance, and a reputation for technological prowess, making it a fascinating company to watch in the coming months. Keep your eyes peeled, because stories like these often have a few twists and turns waiting in the wings. All right, folks, brace yourselves because AppLovin is taking off like a rocket today. If you own shares in AppLovin or considering it, you might just dance a little jig, because the company's stock was absolutely soaring after some impressive third quarter 2024 results came in. AppLovin shares skyrocketed by about 48%, marking an all-time high with prices exceeding $250 per share. For a bit of context here, this same stock was chilling under $10 at the end of 2022. Talk about a serious glow-up. So what's behind this stellar rise? Let's dive in. AppLovin absolutely smashed its previous revenue and earnings estimates. Management had set a pretty ambitious bar for the third quarter, projecting revenue at $1.135 billion, with adjusted earnings before interest, taxes, depreciation, and amortization of $650 million, all at the top end of their guidance. But did they deliver, or what? They crushed it. The company reported revenue of $1.2 billion and adjusted EBITDA of $722 million. Who needs caffeine with numbers like those, right? Fueled by their cutting-edge AI software that's injected fresh momentum into their growth trajectory, AppLovin has managed to surpass expectations a year after its launch, maintaining a turbocharged growth rate. For the next quarter, they expect to grow their revenue and adjusted EBITDA by 31% and 58% respectively. Although these numbers are slightly down from the third quarter's frenzy of 39% and 72%, they've certainly kept investors intrigued upon hearing CEO Adam Foroughi's future vision on the earnings call. The company is still shining in its foundation, like a star performer at monetizing mobile games, but it's now venturing into new arenas. They're diving into the e-commerce space, and initial findings show it's doing swimmingly well. Looks like there's room for more stages on a growth banner, huh? Apart from financial upticks, AppLovin's board expanded their share buyback program, now boasting $2.3 billion under the buyback. While analysts at Needham rated AppLovin with a hold, benchmark analyst Mark Skudowitz set a price target of $66 with a sell rating. Call it some analyst tug-of-war in action. And if you're curious about the options world, momentum traders and financial big shots have been cranking up the excitement with AppLovin's options too. Data shows whales targeting the stock in ranges between $55 and $255 in the last 30 days. The trades, interestingly, saw a neat division of sentiments between bullish and bearish tones. Kind of like how you might feel standing before a range of buffet desserts not knowing where to pounce first. All in all, AppLovin today is the story of witnessing a mobile app titan reinforcing its street cred on the NASDAQ. Between smashing revenue, forward-thinking ventures, expanding buybacks, and careful option plays, we are seeing the makings of a very lovable success story in AppLovin. Now, the only question remains, are you in for the next part of the ride? All right, tech enthusiasts, let's dive right into the news spotlight of the day, EPAM Systems. If you haven't heard the excitement buzzing around this IT services company today, you're in for a treat. EPAM Systems has been making waves after its stock rallied by a whopping 15.5% today. The company, known for its deep ties to Eastern Europe, has been navigating choppy waters caused by geopolitical complications due to the ongoing situation in Ukraine. Having had a significant workforce in both Ukraine and Russia, EPAM's journey to reorganize and rebuild its operational base outside Russia has been quite a tale. More recently, there have been signs that the storm might finally be clearing. So here's the big news. EPAM blew analysts' expectations out of the water in its third quarter earnings report. We're talking a 1.7% rise in revenue, reaching $1.17 billion, and an impressive 14.3% growth in adjusted earnings per share, up to $3.12. These stellar numbers prompted EPAM to revise and raise its full-year revenue outlook, nudging it up to the range of $4.69 billion to $4.7 billion. They also tweaked their adjusted profit predictions for the year, a tweak definitely in the positive direction. But wait, there's more. EPAM Systems is not just shedding the past, it's embracing the future. CEO Arkady Dobkin highlighted the company's forward-thinking strategies, specifically its recent acquisition of Neoris. This signals a push to diversify EPAM's delivery platform and seize new market opportunities. With a focus on leveraging advanced solutions, including cutting-edge Gen AI capabilities, EPAM is clearly intent on broadening its horizons and paving a path for enterprise clients to embrace digital transformation worldwide. Notably, while skyrocketing today, EPAM stock is still trading significantly below its 2021 all-time highs. The company is poised for a potential upturn, with AI and lower interest rates possibly setting the stage for stronger growth in 2025. Plus, with over $2 billion in cash reserves, this company is not living paycheck to paycheck. Now, I'd love to hear from you. Are you as excited about EPAM's brightening skies and tech-driven strategies as some investors seem to be? What do you think about their game plan? Is it enough to bring them back to their former glory days of dizzying growth? Leave your thoughts, predictions, or pie-in-the-sky ideas in the comments section below. Let's keep the conversation going and maybe even solve world, or at least tech world, problems together. And remember, in a market that's as unpredictable as a toddler on sugar, staying updated and informed is half the battle. So, keep your tech radar locked here for all things buzzing in the world of innovation and progress. All right, let's take a closer look at AppLovin, because who doesn't love a good underdog-turned-rockstar story, right? Given the news today, if I were someone who held AppLovin shares, I'd be leaning quite strongly toward that stock. Why, you ask? Let me break it down for you. First off, AppLovin has just delivered a smashing performance this quarter, exceeding both revenue and earnings expectations in spectacular fashion. We've got those third-quarter revenues blasting past projections at $1.2 billion alongside a jaw-dropping 48% stock surge. Numbers like these are hard to argue with, especially when they eclipse the company's ambitious goals. Then there's their AI software-driven growth. This expansion shows AppLovin isn't just resting on its mobile game monetizing laurels. They're stepping into new verticals like e-commerce, where they're already seeing promising outcomes. Taking on a diversified approach adds stability and value proposition to the stock. And let's not forget, guidance going into the next quarter, albeit slightly trimmed down from a blazing third quarter, still depicts strong growth. This paints a picture of longevity and consistent performance. Furthermore, AppLovin has supercharged their share buyback program to over $2.3 billion. More buybacks typically signal confidence from the company in its future prospects, and that's a nice comfort blanket for current stockholders. But one can't entirely ignore the analysts with differing opinions out there, giving it a mixed bag of ratings from hold to the more cautious sell. It reminds us that despite the current high, stocks can fluctuate unpredictably. Here's the key takeaway. That stock, if it's already warming your portfolio, because AppLovin's forward momentum, strategic diversification, and fiscal stewardship promise intriguing longer-term potential. But a gentle reminder to always be like a tech-savvy Sherlock Holmes. Do your own research, weigh what's best for your financial goals, and perhaps indulge a bit in number-crunching fun. Investing isn't guesswork, it's informed speculation mixed with a dash of bravery. Stay savvy, my friends. Keep an eye on how AppLovin and these momentum stories unfold. Today's NASDAQ market activity has been nothing short of a tech roller coaster. IREN Energy is wading through the marshy waters of class action lawsuits, shaking up investors with alleged creative storytelling at its Texas data site. Vimeo's optimistic outlook and solid financial performance have it riding high, touching new peaks, while AppLovin is soaring on strong third-quarter results and future growth projections. Meanwhile, EPAM Systems has cleared some storm clouds with impressive earnings and strategic acquisitions, suggesting brighter days ahead. If you enjoyed this tech-packed summary, make sure to hit that like button, subscribe to the channel, and spread the word by sharing this video with your friends. Stick around for tomorrow's edition where I'll bring you the latest and greatest in tech news. Let's ride these tech waves together.